I found this email in my inbox this morning, and I looked at it and I said, "Oh, I don't know anything about this company." And it's saying PEGA surges 14%. There's still time to ride this Gen AI innovator. Everybody's watching NVIDIA right now. Here's why I'm excited. And this is from Timothy Sykes. And I have nothing against Timothy Sykes. I don't know him. I'm just reading his email. Since he sent it to me, I think it's fair game. And it basically says that the stock roared after its second quarter earnings. The company's Gen AI blueprint tool generates huge interest from customers. This artificial intelligence on the rise, Pegasystems is strongly positioned for future growth. And if you read that, you say, hey, maybe I need to put some money into it. I would encourage you, though, to use a little research. I use Seeking Alpha, and this is their section where it tells me what their earnings are. Well, let's look at their financials first. This is a company that 3 years ago was generating 1.07 million in revenues, and it looks like it's up about 60%. So that on the surface looks real good. But in investing, you got to be interested in what's coming in the future. So we look at earnings here, and we look at earnings estimates, and it says, yeah, they had a big 31% increase in their earnings projections for 2025. But then look what happens. What we're really interested in is not what is the price today. I think we should be interested in what's the price going to be this time next year and the year after that. And God help us if we get to 2028 with this stock when the earnings are going to drop 19, almost 20%. And then again, there's those revenues they're talking about. They're excellent. But wait a second, inflation's 3%. So they're only 3% ahead, and then they start losing game. So when you look at a stock, don't be so concerned about what happened today. What's going to happen tomorrow? I told you about this stock last week, and again, look at the difference here. Here's a company that nobody else is talking about, that their earnings are going to grew in 2025 by 258%, and then 133%. What do you think that's going to do to the stock price? And then 92, and then 70. I mean, this goes all the way out to 2031, and that's the stock price. This is their revenues, and again, I don't think you should buy any stock if you're looking to buy growth stocks who aren't growing their revenues in excess of 20% per year, per annum. Put it in your own perspective. If you aren't increasing your income into your household by some 10, 20%, you aren't keeping up. Because inflation's going up. I mean, your kids got to be educated. Your property insurance is going up. You've got to have a company that is growing their earnings by more than 20%. And is that difficult to find? No. No, this data is all available to us. If you just put into your mind, what is a growth company? A growth company is someone who is growing their revenues, which then translates to their earnings, which translates to their stock price. Now, the other thing I think you need to recognize is I see stocks when someone comes out and says, "Oh my God, they're borrowing money. They just took out a big loan. They're diluting their shares." Why? Why are they doing this? To pay their executives? I don't think so in most cases. In most cases, I think it's because they have recognized a growth opportunity. That's what Goldman Sachs taught me, that you recognize a growth opportunity. And right now, the growth opportunity is all wrapped around AI. So if I've got a growth opportunity that I can really impact my future revenues and thus my future earnings when I reach scale, well, then I need to borrow money to do it. The next thing I need to do is hire the technicians. What did Mark Zuckerberg just do? when he realized he was behind the game against Microsoft and Google in AI, and his Meta Labs, Llama, was not keeping up. He went out and hired one of the best engineers from OpenAI, from pulled it away from ChatGPT. He said, "I don't care what that guy costs. I have to have him on my team." I mean, this is the same way in football and baseball. I don't care what that pitcher costs. I'm going to get him. I don't care what that quarterback costs. I'm going to get him because it is the crux of our future growth. And if we don't get them, we're going to be left behind. So when you see someone come out and say, "Oh my God, their CapEx is 30% of their revenues," good for them. They have recognized a growth opportunity and they're going all in on it. I mean, it's just like you're on the poker table. When you got a full house, you go all in, okay? The odds are on your side. And that's what stocks are all about. I don't care what they did. The stock surged 14% based on the current earnings. What I'm interested in is next year's earnings. You're going to be up 258%, 133%, 92%. Just think if your income was growing that way. Would you be a growth individual? I think you would. But on the other hand, when your revenues are growing 4% and inflation's 3%, 1.93 and inflation's 3%, a negative 19, and Timothy thinks this is a growth opportunity. Do your research. Understand what a growth stock looks like. If they aren't increasing their revenues by 20% per year over the next 3 years, don't go that route. Now, I know what you're going to say. Let's just look at it. This is Apple. They aren't growing their earnings per share by 20%. They get some here. This is their revenues. So why would you own Apple? I don't know, but I can't give it up. Let's look at Microsoft. Okay, this is their growth in their earnings per share. That's respectable. It's not 20%. This is their growth in their revenues. That's very respectable for this big of a company. So I have to hold it. Let's look at NVIDIA. Oh, now that's a different saying. Until you get to 2030 or 2029, how about their revenues? Until you get to 2029. So what do you do with that piece of information? You write it out, but at the end of 2027, you got to make a decision. These are the kinds of tools that are available to you if you'll spend the money to subscribe to them. I have a system here I use. This is my search system. I go in and I ask, what is the growth? Here's a company who's anticipating its revenues over the next year are going to grow by 12,000. I did a video on this company, and so you know what it's about. You know then it's going to grow next year 62% and then 35%. Now its earnings, they're projecting a 95% growth in earnings next year. For some reason we don't have a number here, and then 700. Why would you not say, I need to know more about that company? Well, I did a video just last week on it, and so you already know about it. Okay, I just had to come because I know you get emails like this, and you react. Surged 14%, I need some of that. No, you don't. No, you don't. So understand, 20% growth in revenues, 20% growth in earnings, and do not be afraid of CapEx expenditure and diluting of shares in order to build a new facility. I'm talking about SciTime right now. Went and diluted their shares to the tune of over $400 million, where they had never had capex bigger than 34 million in the future. Why? Might be because they entered into an arrangement with Jensen to change the timing devices within all the GPUs that he's selling. Might be that. So figure out why, and do not be afraid of increase in capex. Okay, this is something I was thinking about, and the other thing, another thing struck me last week. Who was it? Vertiv. Vertiv earnings went up, and what did they do? They increased the dividend. Is that a good thing? Well, if you're into dividend stocks, but if you're into growth companies, what that basically says is we have nothing to do with that money that can increase our earnings in the future. We have nothing to do with that money, no possibilities that could possibly turn into a growth opportunity for us. So we're going to give it to the shareholders. Okay? If that's good for you, okay. It's not for me. I invest in growth stocks. And if Vertiv has nowhere else to put that money to create growth, which will result in growth in their price, I don't want to own them. I'm Kerry. I'm a retired financial advisor. I understand business. That's my strength, and I connect the dots very, very quickly. I want to help you be a better investor. But you've got to understand business, and you've got to recognize just because their revenues surged, their price surged 14%. There's still time to ride this Gen IA innovator. No, there isn't. The time is over. Have a good day.